So we will be looking at the second part of the basics of gamma. If you have not seen the first part, then just go to YouTube in my channel. You will find the basics of gamma exposure part one. That is also there. So if you want to take a look at it, that is already there on the YouTube channel. Now, let us get into the details. So the way I have structured it is we will talk about what is gamma exposure again, a little bit of brief, and then how exactly the gamma exposure is calculated, how you can do it on your own, and if you are trying to use some other services, how you can do that. I'll explain all those things, and then we will get into some gamma related strategies, and I'll show you some examples of how some trades were taken, and based on that you can decide you can actually structure your thought process around the gamma areas, and then decide where to initiate a trade, right? Now, what is the gamma exposure? Let's first understand that. So there are two things. There is something called delta. There is something called gamma. Now we all know what options are, right? So options are an instrument which is running on top of an underlying stock or an index. So you were saying that I will be buying a 6300 call expiring at the end of this particular week, and that will mean that you are expecting the price to go up to 6300. Now, if there are enough players in the market who wants to make the price go to 6300, it may actually go to 6300. Now, say if that particular stock 6300, I'm referring to SPX right now. So if now SPX suddenly sees that, okay, 6300 is the largest area of support or resistance, or even before we go there, suppose you have got, when you are at 6250, you got the 6300 strike. Now the price is going up and your option price is also going up. So the rate of change of this option price is actually called as delta. Now the rate of change is not with respect to time, but with respect to every dollar movement in the underlying. Okay, so when say for example Tesla is moving from 231 to 232, how much increase did that 235 call option have at that point of time? That is your delta. For every $1 movement or 1 point movement, you can say, in the underlying, the amount of movement that is happening in the options market, that is termed as the delta. Now, what is gamma? Gamma is the second derivative of it. So if you watch the first part of the gamma on YouTube, you will see that I use this example that when you are moving a car, you have two things, right? You have speed and then you have acceleration. Speed is the rate at which the car is moving, and acceleration is the rate at which the speed is increasing. Correct. So it is the same thing that we are trying to do here. So delta is the rate of the change in the options price with respect to the every dollar movement in the underlying, whereas gamma is the rate of change of delta for every dollar movement in the underlying. So it's the second derivative. Delta is the first derivative, and then gamma is the second derivative of options prices. Okay, so we look for the rate of change of an options delta, which is gamma. When you have high GEX prices, or when you have high GEX sitting at some areas, you normally see, and when you are in a positive gamma environment like we are right now, what happens is it is a buy the dip market. You can I'm not saying you cannot short. You can of course short, but it becomes a buy the dip market. So you need to look for support areas, and you need to look for proof that the market may actually be turning, right? And where do we look for these things? We look for these things at these gamma positions. Now, how are the gamma positions formed? As the market is building on their options positions, there are areas where the options position concentration becomes high, right? Say for at 6300, there is the highest concentration of calls. So at that point of time, think about it. If you're buying an Apple stock, you're buying it from someone, right? You're buying it from, say, your broker. Now your broker is becoming your counterparty. At that point of time, if your broker does not have the stock to sell you, it has the mechanism that it will automatically borrow it from someone and sell it to you. So what is happening here is that this guy, your broker, is now becoming your counterparty, right? So now you have a position open. Similarly, your broker also has a position open. Now you are long on the call. You are long on the call. You are expecting that the price will go up. But the person from whom you have bought that call, he is actually short on that call, that particular person, your counterparty. Now, since your counterparty trader now is short on calls, as soon as you hit that 6,300 level, they will try to stop the move up. Because as soon as the market moves above that 6,300 level, now the your broker or the market
Hey,
maker also
hey,
needs to buy.
hey, Sabut, sorry to interrupt. Are you sharing something or are you writing something somewhere?
No, can you not see my screen?
Yeah, so is this what you're sharing, right? Delta
Yeah,
over.
yeah, yeah. This is what I'm
Okay,
sharing. This is what I'm
okay.
sharing.
Nothing writing or
No, no,
anything.
no, no, no. I'm not writing
Okay,
anything.
perfect. Thank you.
Okay, so when you are in a high JEX environment or a positive JEX environment, you get price stability. So dealers hedge to pin prices. They will try to sell at 6,300. But now, say the market pressure is huge and the price shoots through 6,300. What happens at that point of time? The dealers, in order to hedge, the market makers, in order to hedge, they will also start buying with you. So the market is buying, the market maker is buying. So that is why when we go above that 1 AG, the highest concentration, the 1 aggregate gamma, and the market pushes, that is when we see a 20, 30, 40, 50 point squeeze.
Mm.
Right. So at that point of time, no one is selling anymore. Everyone knows that if we hold this price, the market will be buying, the market makers will be buying, and the price shoots up. Right. So if you look at this, this is again explaining what delta versus gamma is. If this is your options price, if this is your 6,300, you say that here you are out of the money, here you are in the money, and here you are at the money at 6,300. Right. So if you go above, see that this is how the gamma moves. If you go above, the gamma starts dropping now, and now you see the loss in momentum. But when there is another larger gamma level here, if this is not 1 AG, this is 1 AG here, right at this point, or somewhere here, then as the price gyrates towards that, gamma will keep on increasing at that point as well, right?
Is
So
the price of call, sorry, the price of call depends on the VIX. The higher the VIX, the higher the premium. Is that right?
could you repeat that, please?
Like let's say calls, they're usually cheap when there is not big movements up and down. Like when VIX is lower, let's say 15, when
Hmm.
premium is lower. But
Hmm.
if VIX go up to 30, when premium doubles, or how does it work
See,
with
VIX,
VIX?
VIX is measuring volatility, right? So that will, if you're talking about the options instrument, we'll have to talk about the implied volatility in that case, right? So that's a completely different discussion. What
Mm.
we are trying to do here, see, we do not trade on options on an intraday basis, right? We trade on futures. What we are trying
Mm.
to do is we are trying to use the gamma levels on SPX to understand the movement that will happen on ESP.
Okay.
Or equivalently, you can do it on NDX to understand how it will work on NQ.
Hmm.
Right. And
Okay. Yeah.
these concepts, it is not only about the indices. These concepts of the gamma, using gamma as support and resistances, you can use it across your instruments.
Hmm.
There are definitive option strategies which use these gamma levels to create daily profits on a regular basis. If you know that this is the high gamma, this is the high gamma, most of the days it will stay inside that range and you will become profitable. So there is something called a butterfly spread. I have just started learning it from
Hmm.
another guy on another WhatsApp channel. I still do not know in details about it. Once I get to understand the complete breadth of it, then I'll explain that to you guys.
Hmm.
Okay. So any questions on how what gamma or what delta is? Okay.
No, no. Is there a website you can get information from?
I will
Gamma
talk about
levels?
all those things. I'll talk about all those things.
Okay.
Okay. So, okay. Why GEX matters for the intraday trading. So intraday traders exploit short-term price movements. We all know that. GEX identifies potential support and resistance levels, helps predict volatility spikes or price pinning. We will talk about pinning. We had this example right yesterday. High GEX at a strike price can act as magnet. And that is why the 1 AG always acts as a magnet and becomes the best support and resistance, right? And then you'll have to decide whether that 1 AG is actually negative or positive. And then looking at the market structure, you will be able to decide where the market can move, right? And if you look at SPX, I have noticed one very interesting thing in SPX when I have been looking at gamma. We will talk about it. It always moves across two gamma levels in a day, every time. Every time it will move through two gamma levels. It can be minor, it can be major, but it will move through two gamma levels, and it gets that 30.95% of the days in one direction. Okay. Total gamma exposure in the market, often from market makers. Compare, guys, anyone saying anything? Oh, someone just tried. Okay. Compare prior days SNR with the JEX levels also, right? So this was the prior days support and resistance. Look at this. This was the support here. We came down the next day, hit the same support, and went back up again. This price, this minor level was not there on this day. Okay, this minor level, Kishore, if you're saying something, just speak up.
Yeah, so does it change throughout the day, this 1 AG or 2 AG, or does it stay constant?
It changes, it does change, but I do not look at the intraday gamma levels. Okay, intraday, what you do is you look at the put call buying selling, you look at the options chart rather than looking at the intraday gamma level changes. These gamma levels that I do, how I get my gamma levels, I'll show it to you guys as we move forward. When we go to the couple of slides later, I've shown the calculations. So I'll show you how I actually get the gamma levels from the different systems. I also am developing something that is pulling the data from with an API from TOS. The TOS API is free. And then I'm trying to put it in an Excel and create the data myself so that I end my dependency on these services. Okay, positive gamma exposure may amplify price movements, as for example, gamma squeezes. Negative JEX may dampen movement or pin prices. Okay, so that is what happened yesterday. Let us take a look at what pinning means. Where is the SPX chart? Here. Okay, so these were the gamma levels that we had yesterday, right? This is your VWAP. This is the 200 EMA on 5. This is on 15, and then we have on the 1 hour chart. Now, if you look at this, you will see that 200 EMAs has been awesome support and resistances across, right? Now, what happens is the thing that you need to remember, anything about VWAP or 200 EMA or anything, the thing that you have to remember, if it is coming far away from the 200 EMA, the 200 EMA will act as support. But if it goes then halfway or quarter way or maybe even up to the 70% area and then drops to the 200 EMA again, the 200 EMA has become weaker and may not hold anymore. Okay, so that is same thing for whether you talk about VWAP or any such thing. See, it came up from here, got to the VWAP, got to the 200 EMA in 15 minutes, got rejected so many times, right? And then it went up back here to the 5 minutes EMA. From here, 200 EMA, it got some rejection. But then finally, when it went up for the second time, took out the high, it blew out. Okay, so look at the 200 EMAs of each of the time frames, especially I'm talking about SPX. On each of the time frames, keep these on your chart. These work as extremely good support and resistances for your SPX or ES trades, right? So why SPX becomes more important? Because SPX is an RTH only instrument, right? It works only on the New York time. So that is why these gamma levels become so important when you are in your New York hours. Now, when I'm talking about pinning, look at this 3AG line. Okay. Now, let me expand it. Look at the pinning here. That is why whenever price was coming up here, I was going long. Whenever price was coming up here, I was going long. Now, you have to mix these up with multiple other things. What is the multiple other thing? My next level up is 1 hour. Okay. I look at the RSI. Okay. And in the RSI, what I do is I keep this particular line smooth at 200. Correct. Now you see that it came down to the 200 line and now it is bouncing. It is above 50. So it is still bullish. On the contrary, what has happened on the 5 minutes chart, as we came down here, we are already at 30 and we are starting to bounce at this major level. So now the idea is that it will get attracted towards this 40, this 6,300 level again. Now see, we did not have any negative gamma over the last several days. Yesterday was the first time when we had a large negative gamma at 6,300. What I mentioned this will be a support, but it did not support. It broke through. That means bears are having a little bit of strong presence here, which means this can actually act as resistance again. And that is exactly what happened. It went up to the, remember, this is the 6340 area on ES. So we went up here and immediately we got rejected and we came back down to this 90. And then we had a kind of a trading range. But if you look at it, this is what is happening. And if there was time during the day, that is why even at the last minute at around this area at 60 to 30, I entered long again with the idea that it will keep going in this direction. And it did. Okay, it got stuck at the VWAP again, but we did not. This looks like a bull flag. All of them are having higher lows, and this can actually break out. So you have to have that idea. You'll have to see where it is pinning. 3 AG, 2 AG, 1 AG. These are very important lines. Now, we were so close to the 1 AG. We went up to the 1 AG, but right after that, we broke down the second AG. We tried to recover. We broke it down again. Now I'll show you one more thing, how to understand whether something is going to hold or not. If you have broken a level here, right, come to the 2-minute chart. If you want to see what is happening, come to the 2-minute chart immediately after that. If you see that there is a fair value gap getting created on the bullish side right after the this thing has happened, it has broken down a level, that is your first sign that the price may move up, right? For example, this is what happened here. I'll tell you why it did not work out here, or what was the setup. The trade actually did not get initiated at all, right? So here, if you see, as we broke this down, it did not happen here, but it happened here. Right after we hit this 90, we got this nice fair value gap here. Sorry, that's the wrong one. We got this nice fair value gap here, right, on 2 minutes. And then you see this long wicks from below this fair value gap, this being the high volume bar, this being the gap bar. We came below the gap bar, posted it, and then there was no looking back. This kept on being the support after that. This area kept on being the support after that. And whenever it came here, it bounced above 90. Whenever it came here, it bounced above 90. So this is telling you they are pinning it to 90. So as long as now this low does not give out, this low that created this move up, this does not give up, that means there will be no bearish momentum to the downside. It can be in a trading range, but now it has to break it. But again, you'll have that idea, but again, you have to remember what price action says. Price action says this is a very weak channel and can come down and test this at any point of time. But still this low, as long as it is not broken or just flushed and again come back up, that will again prove that the market is still bullish and tries to go up. Always remember, whenever you are doing the analysis on a weekly and chart compared to the with the weekly time frame and the OPEX time frame, the OPEX data, when the options are actually expiring, and if you are in a positive gamma environment, price is always in a buy the dip mode, and it tries to go up towards the 1 AG. It tries to go to the price where there is the maximum concentration of calls and puts. Now, the 1 AG, the first aggregate gamma line where you have the maximum aggregate gamma, may not be the first COI or POI. COI is the highest call open interest and POI is the highest put open interest. That may be different. right? And that is exactly what we had on this day as well. So 6200 has the highest, I think 6200 or 6250 had the highest gamma exposures. Yes, go ahead, please.
See, like if it is swing to 60 to 90, so like someone is not constantly monitoring like each tick in a day. So what kind of approach will help? Like say if you buy naked call, due to time, my price will decay, right? Time decay will reduce the premium price, right? So in this scenario, what kind of approach do you suggest? Say if I buy uh, like 6300 call, it's gonna decrease the premium due to time, right? So,
Yeah.
so what kind of approach do you suggest in this scenario?
So if you are not confident, if you cannot monitor the market on an intraday basis, you cannot trade on the 5 minute chart. That in that case, I would suggest you to go for the 4 hour chart, and that will in that case you'll have to have the 4 hour chart, and your higher time frames will be daily and weekly. Like for us, when we are trading on the 5 minute chart, 15 minutes is a reference, but our main higher time frames are 1 hour and 4 hours, and extreme is daily, right? But when you are trading on a higher time frame, say 4 hours, you'll have to have your position size selected in that way. If it's not option, if you're trading futures, you'll have to go to micro rather than mini. Make sense? You can still use the same gamma levels.
Okay.
But if you want to pinpoint that entry, the way we do it, we come down to 2 minutes and we look at different things. So if you want to do that, you'll have to do that is how we trade intraday, right?
So if I'm doing 0 DTE, you suggest going to 1 hour, so that way I can reduce the noise, right?
You can reduce the noise. Correct. 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 Okay. And always have that range in mind that, okay, we started at 50. So normally SPX goes 30 to 40 points every day. And 30 points normally in one direction it gets. So once it gets that 30 to 40 points in one direction, look for if it is taking out the 50% area again. Now, again, it is based on the gamma environment. It is based on what your bias for the day is. Okay, so if your bias for the day is bullish, you will try to look for buying the dips. If your bias for the day is bearish, you will try to get the shorts from the resistance areas. So that is how you decide the bias. And my bias stays bullish as long as the 4 hour 20 EMA stays above the 4 hour 200 EMA. But do I not short? Of course I short. That is where these things come into the picture. But I am still bullish. So that is why when I'm bullish, I scalp shorts, I hold longs. And when I'm bearish, I swing shorts and I scalp longs. That is how it happens. So I am still bullish. See this holding the 200 EMA. There has been no strong push beyond the 200 EMA. All these pushes that you see here, they actually got taken out immediately right after this. All this area has been taken out. But is it guaranteed that it will go up? No. Why? Because if you see here, right at this 6300 level, we have, sorry, right above the 6300 level, we have created this bearish fair value gap. Now it is possible all they are doing is they're selling from here and then they want to come down here. So that will become more visible as when we see the next week's chart, whatever we have. Make sense? Let's move on. Okay, so how is GEX calculated? Yeah, go ahead.
The indicators which you added on the TradingView chart, is it like indicator which you built or it's available in
Which
trading?
indicators are you talking about?
Or like 3AG, 2AG?
No. These I will show you what I do. I'll show you.
Okay.
I'll show you.
Okay.
This is not anything built in. I'm trying to, but I have not been successful yet. Okay. So GEX calculations. This is the GEX calculations. What is the option gamma? What is the open interest? Underlying price square divided by 100. You do it across your time period, across all the strike prices. So if you're doing it till this month end, every day you will take the data from today till the end of this month and run it across all those rows that you're getting on the Excel sheet. And then finally you will see where the JEX is coming up maximum, where the call open interest is coming up maximum, where the put open interest is coming up maximum. Plot that in the form of a chart, you have your JEX calculations. So you try to get your top 5 aggregate gamma levels. Aggregate gamma levels clubbed very close may create a band of support or resistance. Highest 4 to 5 areas of put and call open interest. You will mark all these areas. Extra highest 4 to 5 areas of put and call by volume. So this you can mark, not required, but if you are very deep into it, you can use these as well. How to calculate? There are 3 options. Get options data from any platform like TOS. Use Excel to calculate. That's one process which I'm trying to do. Feed options data to ChatGPT. So at the end of the day, take the whole options chain, give it to ChatGPT or Grok and ask it to calculate your gamma levels and your COI and POI levels. That is also possible. Use APIs and calculate offline. So if you are having access to some API, like I'm doing with the TOS API, it will give you the data at every interval, say 5 seconds, 10 seconds. You can keep on calculating. This is where you will get those intraday price fluctuations, right? But more than gamma changing intraday, I look at the COI and the POI changing intraday. That becomes much more important. Make sense? Now let's go to the platform that I use. Give me one moment. Here. So this is the platform that I use, okay? So now, if you see, look, it has changed again. This 6,300 was negative yesterday. This 6,300 level was negative yesterday. This is beyond which the price will fall to negative. The gamma will fall to negative, which happens to be at 62.30, right? Beyond this, the gamma will fall negative. So this will be the last line of support. Even if we fall below 60.50, this will be the last line of support. Now, what is the trade idea? If the price falls below 60.50, goes to 60.30, regain 60.50, it will again come to 62.90. This is 62, not 60. If it goes below 62.30 or to 62.30, reclaim 62.50. The high probability trade is it will mostly come to 62.90 and back to 6,300. And once we get above that, these will be the different levels. See, they are forming levels here. 63.40 is another level. This will be a zone. 63.10, we already have a resistance there, right at the top. 63.10 is already a resistance. If we get above that, this will be the area. If we get above that, this will be the area, then finally this. But then you will say that, okay, if I am long from here, what will I do? Do I get in at every interval? No. If you have started with 2 contracts from here and you see that you have gotten over 63.10, this much you have to keep, right? If you see that your 63.10 is getting taken out to the upside, you can take one profit here, but then once we cross above it, you see there is some fair value gap or body gap support and the price is bouncing from there. You can add on, come out again here with one contract, right? And then you can add on as you move up 40, and then this is your final. And as you keep moving up, once you have moved up here, put your stop loss here. Once you have moved up here, put your stop loss here. Once you have moved up here, put your stop loss here. You can still hold a runner, right? If you have to be intraday, if you want to swing, and if you have got your long here at this point, and you have taken your profit here, hold on that other runner. If you're swinging, if you're not on something like Apex where you have to, or any other funded account where you have to close the day, close the trade at the end of the day, that is where you have to get those things. That is where you need to understand these intraday gamma levels very well. But if you are on your account, you can actually get that done. That is how I got my last long from 62.40 to 63.30. Right, 63.30 was my exit the other day, last week. So those things can also work out if you are trying to swing. And as long as that major low is not taken out, you know that you are safe. That major low has to be taken out. Now, how do you identify those major lows? If you go to the ES mini chart, let me bring out the ES mini chart. and remove everything. Okay, let's go to the hourly chart. Look at the major inflection points. These are your major lows. These are your major lows, right? These are the major inflection points that you are creating. Along with that, if you find that, okay, in this whole move, there is a little red bar, this becomes your support area because this is your bull flag at this point. This is your bull flag, and see, we bounced right from the flag. And now as we keep going up, if we take out 63.40, it will again try to get back to these levels to the upside. So these are the different major levels that we identify, and especially we do it on the 4-hour and the 1-hour chart because that becomes very important for us as intraday traders. And if that 4-hour and 1-hour is matching up with your daily, weekly, monthly lines, those lines become much more stronger. And if they are matching up with your gamma, that's your lifeline. That's telling you that, okay, this is a very strong inflection point. Beyond this, something may happen. Now, why we get bothered? Because most of the people who are here, or most of the people on my Discord, they all trade on funded accounts. They all trade on prop firms, right? So based on the rules of the prop firm, we are like, oh, it's going. Let me take profit. Let me come out of it. Let me take the loss. Let me hold on to the trade, although it's a losing trade, because I do not want to get into the trailing stop loss system. So even if you're not coming out of the trade and you're falling into the trailing stop loss system, you're actually losing out more, right? So try to understand what the market is doing rather than trying to get every move. It is impossible to capture every move. You cannot, if you are not a very sophisticated system, or if you have very good idea of understanding what the market is going to do, there is no way you will buy here, right? As the price is going up, I may buy here, but there is no way I will buy here. I need proof here. I need some kind of proof here to say that, okay, the price is going up. What was the proof here? 62.40. What does that mean? 6200. What was at 6200? Our 200 EMA. We bounced from there. What was at 6200? Our major COI and POI. We bounced from there. This is the day I'm talking about. Let me bring the 200 EMA. I have the SPX chart open, right? We bring in the SPX chart. There is SPX. Let me bring it up from here. Where did it go? Here. Okay, see, 62.40. That is where it happened, right? 62.40. Here, see. This was, if you look at the SPX chart, this came down below the 200 EMA. This is where we had the maximum COI and POI. We went above the 200 EMA. We came from top. We went above the 200 EMA. And this is now telling you this strong move across this, and then not able to break this down. This is now becoming support, and it will keep going up. And it came to that 62.40. So that becomes your now the hourly major low at 62.40, and the price went up from here. So this is your major low right now. So as long as this does not get broken, you cannot do anything. Right? You should not be trying to short and hold if you are not super confident that, okay, now we have reached the all-time high. Now we are going to get into a 2%, 3% pullback. And so based on that, you are getting into this trade. If you are super confident and if you can hold your trade through the all-time high, yes, you're very welcome to do that. I don't know, you don't know, no one knows where the market is going to move in the next 1 minute. It is only what we look at the chart. We look at our support and resistances. We are combining that with the gamma levels, because these levels matter. Because the market makers, the BlackRocks of the world, the State Streets of the world, they are all sitting here. They're all sitting here. They're all sitting here. So that is why these levels matter. You need to understand what is happening around these levels. Every time we came down to this area, we created a bullish fair value gap. Although we closed it, but again, immediately we are creating a bullish fair value gap. Immediately we are creating a bullish fair value gap. That is telling you this is support. There are bulls here. As long as we do not break these down, or we do not have a fair value gap which will be held. None of the bearish fair value gaps were being held, but the bullish were being held. So as long as that is being held, we are not going below the gap bar of the previous fair value gap. You are still going up. And that is how the market has moved. We held this particular gap that we saw, and we kept moving up. Now, these gaps you will not often see on the 5 minutes. So whenever you are at these inflection points, if you think, oh, what is going to happen, you go to the 2-minute chart, see which direction a fair value gap is holding or which direction is closing out. That will give you an idea which direction the market is going to sway for the next several hours. Now, we stayed in this trading range, but finally we are trying to break out, and we have been making higher lows. So there is a great probability that it will come and hit this large negative gamma support, which is no more negative gamma support. As you see here, we have changed, we have moved back from negative to positive. Now, how do I, is that what is next in the slide here? How do I get my gamma levels every day? So what I do is, if I am on Monday, suppose for next week, I will select 21, 22, 23, 24, 25. This is covering my next week. Along with that, I will select the OPEX values. The OPEX values will be sometime in August, and they will be marked as monthly. See? So I will take this 815 and I will take this 815 weekly as well, because these are both expiring on the same day. So I will take this complete week and I will take these 2 days, and I'll make sure that the furthermore are not selected. Nothing more is selected. So I will take these and I'll take these 2. Now, come tomorrow, I will not select these anymore. Even when I'm pulling in the API, I will not select these anymore. I will select these. Come Wednesday, I will not select Monday and Tuesday. I'll select these 3 and I'll have these 2 at the end. When I come to the OPEX day, I do not keep anything selected. Like we were doing it for yesterday, I just kept these 2 selected. So that is how you get your OPEX day values. And then I say show chart and it comes up. Below that, we have these. Okay, this is telling you where you have your highest call and put concentration. This is 6,300. Right? So below this, market makers will try to keep it below this. So as long as it stays below this, they are safe with the calls. But as long as they stay below this, they are not safe with the puts. So if they keep coming down, staying here and keep coming down, mostly it will get to the 6265 to the 6250 level, and then we will see compared to this. See, this is also matching up. 6265 here, 6270. This is creating a very good area of support. And if you notice on SPX on a regular basis, 6275 or XX75 to XX80 and XX25 to XX20, these 2 zones create very good support and resistance areas on the gamma level. XX is any value, XX75 to 80 and XX25 to 20. These are very important levels where most of the time a major or a minor gamma is formed, and when it goes up from 50 or comes down from 50, that is the first spot that you need to take profit. Make sense? Any questions so far? Okay. So GEX and market dynamics. What is dealer hedging? Dealers buy, sell underlying to stay delta neutral. Now, most of the dealers try to do delta hedging instead of gamma hedging. What is the gamma hedging? What is delta hedging? Delta hedging is if you are buying calls, they are selling calls, so they will short the stock as well, right? Just to make sure that they are on the they are on the right side of the trade and they are saved. In case of the sudden move of the market, they will not be in a place where they will be in a big hole. And as we start moving above the 1 AG, if the 1 AG is positive, they start buying again and thereby creating that strong push to the upside. Or if we are below the 1 AG while the 1 AG is negative and people start shorting, it may create a squeeze to the downside as well. Again, high GEX environment, heavy hedging reduces volatility. Low GEX environment, less hedging, amplifying price swings. That is why when you are in a low gamma environment, you get strong moves, 30-40 points without any pullbacks. Intraday impact, it pins near the strikes and with the hijacks. Okay, so whenever you have a high jacks levels, you will see that it is pinning to that jacks level with. So that is why the 1 AGs, the 2 AGs, and the 3 AGs become so important, because we keep on looking whether they're pinning at that spot, whether they're pinning at that particular AG line, and if they're pinning, whether they're pinning above it or below it. That is going to give us the subsequent direction of the subsequent trade. So suggested frequency of JEX calculations if you're trying to do intraday, beginning of the day or end of the day for the next day. 11:20 a.m. EST. This is one time where you can recalculate your JEX. 2:30 p.m. EST. This is when you can recalculate your JEX. But when you are doing these, you are doing this only on that specific day. If I go back to this, when you are doing it at the intraday, you do not select all these dates. You will select only the date for which you are trying to find it. You are not selecting anything else when you're trying to do the intraday. When you're trying to start the day, start the week, start the month, yes, all these things will become very important. Like for now, for the initial analysis to start, I will select all the days extending up to 8:15. Okay, just to see how the market is standing right now till the next OPEX to OPEX, what is going to happen. And then I will start to break it down into this week, including what we have in the OPEX. Along with that, I will look at what are the nearest support and resistances, and I'll try to match them up with each other. Make sense? Okay, so there are different and along with that, if you know how to look at the options chain, we will look at it in the next session. If you know how to look at the options chain, you can also look at the options chain when it hits these areas and see how whether the put calling is going up, or the put calling or put selling is happening, or call buying or call selling is happening. So that is another way to understand. So there are different websites to get these. I use barchart.com. This is cheapest, $30 a month. But there are several other websites. Naveen uses one. Naveen, what is the one that you use? Unusual Whales, right? That is another website. They're around $100 a month, but the data representation there is much better than what we have on barchart.com. So whatever thing that you are comfortable with, whichever representation is telling you that, okay, I can go with this, I can work with this, you use that particular thing and keep moving with that. Make sense? Next, we will get into the indicators to complement strategies, and then we will look at different JEX strategies that we have. But I really have to leave for the airport today, so I will keep it here till now, and we will continue again next Saturday at the same time. Make sense?
Yes.
Okay, so I will stop the recording here, and I will see you guys. I'll see you guys again on Monday. But for this particular session to continue, we will continue it again on next Saturday at 10 a.m.
Okay.
Yeah, I have a question, subject.
Yes, go ahead.
Like I'm following that level. So based on the kicks, you are kind of drawing support resistance. Based on that, we are making decision, right? So what kind of strategy we need to take? Sometimes spread will work out because the premium and the time decay spread will help us in staying on the position for long time, right? If it is naked come, so it will hit our stop loss, and it's gonna take us out of that contract, right? So if you can provide some insight, these days this kind of strategy will work. These days this kind of strategy will work. So that will help. Like I'm not a beginner, but kind of intermediate level, but kind of analysis paralysis kind of stage. So
that is what we will be talking about in all these JEX strategies, how to use them, where to use them, what are the different other indicators that you can take support of if you're not very confident about the price action looking at the chart. Okay, like we have RSI, we have VWAP, we have this 200 EMA. So there are several things, right? So we will take a look at them.
Okay, cool. Thank you.
Okay.
Thanks.
Okay. I will stop the recording here, and I will see you guys again next